And the cost accounting. So here the financial accounting provides the information about the profits and losses, financial position of the business, and internal users and the external users. So here we know in the financial information, like the transactions, we are going to prepare the journal. From the journal, we are going to post them into the concerned ledgers, and the ledgers will be balanced. That will be transferred to the trial balance. With the help of the trial balance, we are going to prepare the profit and loss account and balance sheet. So this information we are going to interpret to the internal user as well as the external users. We know the internal users like management, manager, employees, and external users like citizen, government, and creditors, investors, etc. So such people has to know what is the position of the business concern. Suppose the creditor, if the business position is good, is going to continue supply. Investor, if the position is good, he can invest more, the excess money than he had. And next, as a government is going to levy the taxes. These are the external uses. And internal uses, the management has to know what are the funds they kept in their business, whether the funds are there or not. They are going to cross check. And the manager, he has to take the decisions according to the positions. And next, coming to the employees, if the financial position is good, he can ask the more salary and incentives from their management. And cost accounting provides the information to the management for proper planning and operations control and decision making. So the cost accounting is needed to know the cost of the products and whether what are the plans and what are the production they want to make, whether they are going according to the plans or not, and where they has to control. And the decision is going to be taken by the management. And for the purpose, they needed the cost accounting as well as the financial accounting information. I told you in the last classes. And forms of accounts. So these accounts are going to be kept to meet the requirement of Companies Act and Income Tax Act. I told you the profit and loss account and balance sheet is going to be a source document or an evidence to file the income tax returns. We are going to add both. And these accounts are generally kept voluntary to meet the requirement of the management. It means that whenever the management is required, according to their nature of the company and their industry, whenever the management is asking, they're going to prepare these statements. And next, recording. It classifies, analyzing, and summarizing, and interpreting the data by using the some principles. And it records the expenditure in an objective manner. So in the cost accounting, we are going to know the various costs, like fixed cost, variable cost, semi-variable cost, direct expenses, indirect expenses, like that. The expenditure we are going to know by using the cost accounting. And control, it emphasizes on recording the aspects and without attaching any importance to control. So here it provides a detailed system of control for material, labor, overhead cost with the help of the standard costing and the budgetary control. I told you to make the production, we are going to learn the material in detail, the second chapter, okay, labor third chapter, and overhead fourth chapters. Like the cost with the help of the standard costing. So here the cost accounting is going to estimate, then they are going to make the production. So what are the estimations they made and what actually they incurred, and that we are going to prepare the standard costing. And budget is a future plan, and based on the estimation the costing is needed. So that's why we are going to prepare the budgets, and they are going to control by using that. So here the periodicity of reporting. So here the financial accounting we are going to prepare at the year end. So here the reports are operating results and financial position at the end of the year. As per the disclosure convention, the profit and loss account and the balance sheet we are going to prepare at the year end. Either it may be 31st March or 31st December, either financial year or the calendar year. At the year end, we are going to prepare the financial statements. And it gives information through the cost reports as per the requirement of the management. So whereas the cost accounting, whenever they require, the management is needed, they are going to prepare these reports and they are going to submit to the management. And reporting of costs. The costs are reported in aggregate the financial accounts. But whereas the costs are going to be broken down to the unit basis as the cost account is. So here I told you the last class, if you go for bakery, you're asking one curry puff, one egg puff, and one bread packet, and dozen bananas, kg sugar. So like that, we are going to measure the cost unit for a single product. What is the cost is going to be incurred, and for the total production also we are going to know by using the cost accounting. And nature of transactions, the financial accounts relate to the commercial transactions of the business. We are going to write on the monetary terms. But whereas the cost account relates to the transaction connected with the manufacture of goods and services. To make the production, what are the costs are going to be incurred, we are going to write. And next, information. The financial accounts will use monetary transactions only. I told clearly. So here the salaries. We are writing 15,000. Wages 200, and rent 2,000. Printing and stationery 500. Wages 2,000. So like that, we are going to mention under the financial accounting monetary terms only. But whereas a cost accounting, we are going to explain the monetary terms as well as the non-monetary terms. What is their planned capacity, how much units they were produced, and what is the cost is going to be incurred at the fixed cost or variable cost. According to that, we are going to make the proportionate under the cost accounting. So here we are mentioning the units also, the products, how much we have been produced. So there we are writing only the monetary terms. Here we are writing monetary as well as the non-monetary transactions is going to be recorded. And the fixation of selling price. The final accounts are not maintained with the object of fixing of the selling price. By using the financial accounting, we could not able to fix the selling price for the products. But whereas a cost accounting, we could able to fix the price for the products. So the cost accounting provides the sufficient data for fixation of the selling price. The cost accounting provides sufficient data for fixation of selling price. So we are going to know what is the total cost of a product, and apart from that we are going to add the profit, and we can able to fix the selling price for the products. And figures. The financial accounts deals mainly with the actual facts and figures. What are incurred, that facts only we are going to write. But here the cost accounts deals the partially with the facts and figures and partially with the estimates. In the cost accounting, we can estimate the production and estimation of cost. And here's the relative efficiency. The financial accounts do not provide the information on the relative efficiencies of the various workers, plants, and machinery. They are all, we are writing only the monetary terms. They couldn't about say how many workers are involved, how many plants are involved, how much machinery we are using. So that we are not going to write anything. So here the cost accounts provides the valuable information on the relative efficiencies on the various workers, plants, and machinery. How many machine hours we are used, the labor or work, what is the wages we paid, and all this information, the machine hour rate, and etc. We are going to learn in the second and third chapter. We are going to record the data. And here the stock valuation. The stocks are valued at cost or the market price, whichever is less. So stocks are going to be valued at cost. We know at cost. What is at cost? Historical. Suppose they purchased for 50,000 of a building. Whenever you are writing the accountancy, if the price increases from 50 to 5 lakhs or 50 to 5,000 also, we have to show only the 50,000 because of the cost concept which we have learned under the financial accounting. So the financial accounting information we are going to write at cost. But here the stocks are valued at cost. And the financial accounting is a positive signs. And here the positive signs always has normative signs. So these are the differences between the financial accounting and the cost accounting. And there are some advantages of the cost accounting. You see the first point, it helps the management to determine the cost of production of a given volume of output, thereby fixing the prices. So just now I said, to know the cost of each product, we are going to prepare the cost sheet. It contains a prime cost, factory cost, office cost, a total cost, and by comparing with the sales, we are going to get the profit. So here we are going to know how much profit we are going to be fixed and we can able to fix the selling price with the total cost. If you fix add the profit, you are going to get the selling price on the cost sheet you're learning on the fourth chapter. So that's why by using the costing techniques, we can able to fix the prices for the products, and we are going to record the various costs under the cost accounting. And it helps the management to identify the profitable and unprofitable line of business, by doing which business or the products, either they're supposed incurring such losses, they can remove such products and they can produce another way, and they can use different measures and they can give the profitability. And here they provide the information upon which estimates and tenders are being based in the contract costing. There we are going to make some quotations, and according to the tender, they are going to quote and what is the income they got and what is the expenditure they got, whether they got a profit on contract or not, they are going to check. So such information we can estimate, and we can actually we can compare with the standard costing. And it guides the future production policies. So here the cost accounting, suppose this time you got suppose 10,000 units are produced with a cost of 5,000. Next time we are going to plan how to reduce the cost with the 4,000, how to able to produce the 10,000 units. So like that we can make the production policies, and we can guide for the future policies by using the costing techniques and methods. And it provides the valuable information for the management in decision making and forward planning. The last class we were discussed, suppose this pen they are going to sell outside the market at 5 rupees, they can able to produce with the 3 rupees, they are getting a profit of 2 rupees. If they buy the pen with outside 4 rupees, selling with 5, they are getting only 1 profit. Which is better, make or buy? So here the make is important. Vice versa, like if they can able to produce the pen with 4 and buying with 3 rupees, they're getting more profit by buying. So they can go for the buy decisions. So like by using this costing information, the management can take the effective decisions. So here the management is going to approach these techniques, and they are going to take the effective decision for the forward planning. So here the cost accounting by this information, suppose they got some losses in the previous year, now they will think how to reduce the loss, how to make the cost control, and by making measures they can estimate for the future costs also. And next, with the effective cost control methods and cost accounting helps the management to increase the overall profitability of the organization. So here, by making the cost control, just what I said. So here, the cost accounting, so there, wherever the possibilities are there, suppose some workers are not going to work in a proper manner, sometimes they are chit-chatting and doing something. So they are going to be controlled, and they are going to increase the plant capacity, or they are going to increase the qualitative raw materials. And by taking some measures, and they can increase the plant capacity, and the production levels are going to be increased, and the cost accountant is going to see the estimation and the future. At the same time, they are going to take the management with this information is going to take the decisions to reduce the cost and increase the profitability of the business concerns. And next, the exact cause of the disease or an increase in a profit loss can be detected. So here, by observing the cost accounting, just now I said the various costs are going to be recorded, where they went wrong, they can find out, and immediately they are going to take the measures by the management decisions. By information this is needed, the costing information is needed to the management, and the facts or whether the faults has been occurred, that is going to be detected. And it discloses the relative efficiencies to the difference of workers. So just now I said whether the people are skilled labor or not, they can easily identify, and they can provide incentive plans and etc. to the workers, and they can improve their efficiency, and they can increase the productivity. And cost information also helpful to the government, and this information also helpful to the consumers. And what is the cost of a single product in total production, they are going to know, and they can easily purchase particular product by knowing it. And the public enterprise also is going to ask to know the cost accounting information to produce these products, what are the costs are going to be incurred. And with an advantage, there will be some limitations. So the following are the main limitations of the cost accounting. So cost accounting lacks the uniform procedure, or different cost accountant may have different procedures. I told you in the last class itself. By the nature of the product, according to the nature of the product, and based on the industry, they are going to use the different costing technique. I told you, for example, the job is a small one. So, for example, the printing press, they are going to print 100 invitation cards. They're taking a job and they will print, the job is over. In a bakery, suppose they're taking an order of cake, they will produce the cake and they will sell the cake. The job is over. So, like that, and where the product is going to be produced in the various distinct stages, different processes. So, such like sugar or oil industry, they are going to the process stage. And whereas the government is going to want to build like bridges, dams, canals, roads, they are going to approach the contract costing. Means to say the various industries are having the various different costing techniques and methods. So the cost accountant should have the thorough knowledge how to prepare the various procedures and which is suitable for their company. And there are a large number of conventions, estimates, and the flexible factors such as classification of cost and limits and issue of materials and standard prices, apportionment of overheads, expenses. And here, the large number of conventions and the factors such as the classification of costs. Next topic we are going to learn like direct cost, direct material, direct labor, indirect labor, direct expense, indirect expense. So like that, they has to proportionate the expenses like fixed, variable, sunk cost, opportunity cost, and variable other costs. They has to know which cost that is going to fall under which cost, and then only they can prepare in a well manner. And forgetting of benefits of cost accounting, many formalities of the observed in a small or medium sized concerns. Just now I said job is a small one, contract is a big one. So according to the nature of the firms and according to the size of the firm, which technique or method is suitable, they has to, and that they has to adapt. And the contribution of cost accounting handling with the futuristic situations has not been much. For example, has evolved so far tool of handling inflationary situations, and such are not going to be recorded. And next, in cost accounting system, the accountant cannot estimate the price of the asset on their current value. So they are going to take the historical or at cost. And with the help of the cost accounting, we cannot find out the tax liabilities of the company. So where we are using the profit and loss account and balance sheet as an evidence to file the income tax returns. So we cannot able to find the taxes. Just we can produce a product and that is going to be sold. And if the usefulness of the cost accounting is restricted to the ability and willingness of management to take the decision based on the information received. If they got a reliable fact data, the decision will be effective manner. Suppose they got some false information by the accountant or somewhere else, they are going to be wrong by the decision taken by the management. I told you clearly, the financial accounting and cost accounting is needed to the management to take the effective decisions. If they got the reliable and fact information, what are the decisions they have taken that will be effective for them and they are going to get the good results. Suppose if they are got some false data, they cannot make anything. And next topic you're having here, installation of costing system. So just now we discussed the what has been stated the preceding sections. It will be seen that there cannot be redundant cost of suitable for a business. Just now I said for a small, they have to use the job for various stages that they produce a product, process costing. And if they make the big one as a contractor, so like that, the different methods and techniques they have to use and which method is suitable for their firm, they have to know. And the specific needed according to that system, they have to approach. And next, before installing a costing system, proper care should be taken to study and taken into account the aspects involved, and systems will be missed full advantages will not be realized from it. And they has to be taken care of their what are the information they are recording and the system they are going to involve, that they has to know what are the procedures, methods, and techniques, the process, how to record it and how to use it. And the following point should be logged and the purpose is satisfied before the installing the costing system. The nature and method of stage of production, the number of varieties and the quantity of each product, the technical aspect should be examined. So what is their production level and how many varieties they are going to produce and which technique is suitable for their firm, how the simple production method or the degree of control is needed in everywhere. And the size of the layout of the organization, the factory should be studied. And this method of purchases, the receipts, storage, and the issue of material is going to be examined. We are going to learn under the second chapter, like material. There we are writing the stores ledgers. I told you clearly in the last class itself. When they are going to issue the materials, the store's ledger, storekeeper has to maintain the store's ledger. How much raw material they have been issued for production, how much they have been required, how much they are having, like purchase, issue, and balances. By using like FIFO and the LIFO method, first in, first out, lost in, first out, weighted average, and average method, IFO and NIFO, highest in, first out, next in, first out. So like there are the different various techniques we are going to learn, and such methods, such procedures, issue of materials, there has to be no wherever required, there has to modify as per the requirement. And the wage payment method should be studied. So here in the third chapter, you are going to learn like the labor chapter, like also row ones, wage rate, piece rate method, average method. So like that, there are the different methods to issue the wages, machine hour rate. So like that, you have to know the wages payment methods is going to be should be studied. There are separate some formulas are there, and if you have thorough the formula and the procedures and rules, then only you can able to do the sums. And that also should cost accountant has to be know while installing the different cost accounting system to issue the wages to their laborers. The requirements of the management and the policies adapted by them to ours to control them, and they have to keep it in view. And the cost accounting system should be considered. The neatness emphasized the installation of operation of system should be economic. So and should not be more expensive. With the lesser prices, they can able to adapt the system and they can use it and they can make an effective manner and they can give the good results for their firm, and the suitable accounting system they have to mention. And the system should be simple and easy to operate. Just now I said it should be easy to operate. And the system can be effective to run to appropriate properly suited by the organization. So according to the nature of the firm, nature of the industry, and size of that industry, they have to use the different technique or method. And forms and records origin entry should be designed to involve the minimum clerical work and expenditure. So just now I said it should not be more expensive. The people who are having the knowledge to of this recording of the data, they are going to use with the lesser prices they can utilize and they can make. Suppose the skilled people like ICW and other some other cost accounts if required, it's more expensive to the firm because based on the size of the industry, size of the production, what are the profits they're getting from that only, they has to make the expenses. And these are going to be looked after. And the system should be so designated to the cost control can be effectively exercised. And they could able to exercise and where they can control the cost by using the standard as well as the budgetary costing. So wherever the control, just now I said, they can use the qualitative raw materials, then increase the plant capacity, or they can increase the skilled labor instead of unskilled, and they can use the different machineries. Okay, and by that they can reduce the cost wherever the possibilities are there. They has to control and their cost reduction and cost control, and the firm can be exercised. A system should incorporate the suitable procedure for reporting the various levels of management. This should be based on the principles of exception. So here is the same thing you are going to learn under management account, management by exceptions. So here it means that what are the estimates they made to make the products? What are the estimation they made while they are implementing? They should actually what is the expenditure they are going to incur, and they can compare with their levels. For example, I told you the last time they got some loss. What is the reason behind that? If they got the profit, why they are increasing more profit? And these techniques they has to follow, and based on the principles, based on the management decisions, they has to follow, and it should be useful for everyone, and they has to know the cost accounting system, and they can easily invest and the cost system and to get the profits. The next topic you are having the cost center, the cost concepts under that cost center, cost unit. So here the cost center, the CMA terminology, what they're saying, a production or service location, the function, activity, or an item equipment which costs are accumulated. A cost center, a simple collecting a place for costs. Collecting a place for costs or operating the cost center. So the total cost is related to the cost units which have passed through the cost center. Example, production cost center and service cost center. So for example, if you are preparing a cost sheet, you are going to know the prime cost, factory cost, works cost. It is also called as office cost. Okay, selling and distribution that we are calling as cost of sales and total cost. So here in the cost center, there are the different type of costs are there, and they has to know what cost is it, and the examples is going to come under. So the cost center is a place of the collection of different costs. And here the cost unit. So here, whenever you are going to measure, we should have one unit of a product or a service. The cost units are the things that business is going to be set up to provide which cost is ascertained. For example, I told you, if you went a bakery, you're asking one curry puff, one egg puff, or one cake. If you go for a kirana shop, for example, you're asking for 5 kgs of sugar, 5 kgs of rice. Okay, like that. If you went, suppose a class store, you're asking 3 meters of cloth. Like the unit of measure should be required according to their production. They has to know what is the unit of measure for their cost unit. They has to know. So here the cost unit means what? Unit of a product or service. So here a sugar mill, they are making the measurement as ton for sugar. In textile mill, cost per meter. So like that, they are taking the cost unit. And the classification of cost by the nature, functional, behavior, and the managerial decisions. There are the different classifications or there of costs. Now see the cost. Element of cost classification. So here I told you clearly the cost ascertainment of a cost of a product. So here the cost of a product is divided into 3 types. One is material, labor, and expenses. Again it is divided direct material, indirect material, direct labor, indirect labor, direct expense, indirect expense. All the direct together we are calling as prime cost, all the indirect we are calling as overheads. Again the overheads are divided into 3 types: factory overheads, office overheads, selling and distribution overheads. So here once again, all the direct material, direct labor, direct expense. These 3 direct together we are calling as prime cost, or it is also called as first cost. And all the indirect material, indirect labor, and indirect expenses we are calling as overheads. The overheads are divided into 3 types: factory overheads, office overheads, selling and distribution overheads. And here the material